Another Friday on us, 19th of September. And of course, it's after these rates got released, the rate drop. There's been a lot of folks out there wanting to know, how did that affect it? Should I lock now? Should I, what do we do now? Well, guys, it affected it the way we had anticipated. But looking at the market outside of, the Fed dropping the rate by a 1/4%, we also had housing starts come out. That is actually a little bit lower than what they anticipated. Mortgage applications are down a little bit. They're up quite a bit. So they've gone up quite a bit from where they were prior. Housing starts down, not a lot, but they are still down, somewhere in the range of about 43,000 starts is what it looks like. Then when we're looking at building permits, those are also down as well, somewhere in the range of about 38,000 permits. So those are kind of correlating, if you will. Then you've got the continuing claims, as far as jobless claims are concerned. Those are down. A little bit of improvement, not a lot, only about 7,000. Initial claims, those are down a bit too. They got cut down by somewhere in the range of about 33,000-ish, somewhere in there. So we've had some improvement in the job side of it, which tends to help stock a bit, but it hasn't been a monster amount. So I don't know how much that influenced stock, but we've seen stock prices jump up a bit over these last few days. So that's kind of the things that we see moving the market. It was the Fed rate decision, in my opinion, that moved everything because everybody was waiting for it. There was a lot of holdout for seeing if they're going to drop it a half, but didn't happen, of course. And we had that quick little jump in the middle of the week. I wanted to show you guys that it did affect the market. As we can see, we saw that day. Here is the Fed rate decision date. I'll go ahead and zoom this down a bit so you can see that. That date, we had the negative. Following day was negative. Tried to go high. It lost ground. And then today, try to jump in there, but it's right in the bottom of that candle. It went up and then it lost ground again. We see it really playing around in the place of the start for today. For right now, we don't know how it's going to work out, but there's a lot of speculation. A lot of people come up with reasons why this is happening. Well, why did it not do more? It should have done more. Well, the bottom line here is it's the price of the security. When we get into this right here, let me show this again. This is the value of the security that the private sector is willing to invest their money into it. It doesn't create enough value to them to invest more beyond this. It's like buying a stock. Do you buy something that's overvalued because you think it's going to be worth it? No, you don't pay more for a stock than what it's worth. Now, in reality, people are paying more for a stock than what it's worth, but they're not paying more than what somebody else is willing to pay for it. If they bought into this higher than this, they'd be buying it at a price point that's worth more than what anybody else is willing to pay. We've seen anytime it's gotten in here, it's sold out and sold out hard because it's paying way too much for the security. Same here. We've got up in here, sold out hard. But then we also have this other factor. The Fed dropped the rates. Take it on the chin. I'll bring this up again. Fed dropped the rates, we got hit again. Fed dropped the rates, got hit again. So that right there seems to be somewhat of an inflationary move. I can't speak to all the things. There's a lot of people who have a lot more knowledge than I do about this. I'm just looking at the one thing, price action. This right here seems to be a barrier, and we do every other time. We come up, we hit the top. We come up, we hit the bottom. We come up, we hit the top. We come up, we hit the bottom, we come up and hit the top. So we're going to be possibly coming out again, coming down and hitting the bottom somewhere in here. And so that's the roller coaster I believe that we are on. So when we're locking in interest rates or we're trying to determine what's going to happen in the future, I believe it has everything to do with this barrier here. Now, if somehow we break through, let's say we do, let's say we make the run up, we break through this barrier. What else do we have? We have this. This, I believe, is like the super barrier, right? This is the big great ice wall, in my opinion. This 10252. That right there is the value of the security the day they announced quantitative easing. Let's go out here. Let's take a look at this. Actually, not the day they announced this, date that the Fed actually started quantitative easing. So, date of announcement here, the block that we've been watching, where we pierced that. This is the bottom, here's the top. Bottom, top. This is what we're looking at here. Just so you know, look, bottom, top, bottom, top. Same here. Bottom top. This is the day they announced quantitative easing. This is the end of the day's trading from that announcement. That's what that whole thing represents. But up here, this orange line, that represents the day they started quantitative easing. Announced it here, started it here. Everything above this, everything here from this right here, this yellow line to this yellow line was all the markets trading in one day, and then of course the market continued to trade coming into the date the Fed started doing quantitative easing, and then they ran that up. This is all combination of U.S. Treasury capital and private capital and institutional capital all coming in here until they stopped it when they started doing quantitative tightening here. Fell down. Now they started quantitative tightening back in here, back in this area, and it kind of fell down. They went back to quantitative easing, hardcore quantitative easing right here during COVID, and then we just pushed it really high and got those very, very, very low interest rates, drove things down significantly on quantitative tightening. Now we're playing in this range, which is along the same lines of the range prior. So all of this that brought interest rates lower than where they are today was capital created by the Fed and private capital and institutional capital following suit. That's what I see. So my opinion is we are at the rates where they should be, because nobody in the market wants to give us lower interest rates or push more money into it. There's not enough value in it. That's my opinion. So go take it as you wish, but I have shown it every time, ever since I discovered these lines here. We've hit it 1, 2, 3, 4, 5, 6 times, and it's proven to be accurate every time. So that's where we are. If you have any other questions about this kind of stuff, reach out to me, aaronchapman.com, or email me at info@aaronchapman.com, info@aaronchapman. We'll connect up and talk a little bit more about it. Also plan out how you're going to acquire your investment real estate. What's the best way to go about that? I like the family trust with the holding company and LLCs and using the DSCR product. I like that. I'll explain to you why I like that. Let's talk.